I'm excited to share with you a 2025 update on behalf of our firm. During this video, I will also share some information regarding 2024, how the markets did, and even how the experts did. I'll also share with you our commentary for 2025. I'd like to share our investment approach, our philosophy, what we have in store for this year. I will share with you some updates that we're making to our Bander Growth portfolio, as well as our Bander Income portfolio. These are actively managed, customized models. Allow me to share my screen as we go. As we look back at 2024, we can see that all in all, it was a good year for the markets. The U.S. equity market had positive returns for the year and outperformed both non-U.S. developed and emerging markets. Large growth stocks led the way with the highest rate of return, and small value stocks had the least amount of increase. However, U.S. stock market grew in 2024. We did notice that value stocks underperformed growth stocks. We also noticed that small cap stocks underperformed large cap or larger company stocks. However, it was a positive year for the market in 2024. Every year, the so-called smart money will make their predictions of what will happen with the U.S. stock market and with the economy. And every year, it's enticing to follow their market expertise. But how do they do it making forecasts? Well, let's look back at 2024. If you followed the advice of JP Morgan, Morgan Stanley, Wells Fargo, you may have stayed out of the market, completely fearing that you would lose money. It turns out the smart money doesn't have a crystal ball either. A better approach to investing? We feel to buy a big basket of the best U.S. and international companies in the world and then own them for a long time. We do this in our Bander Growth portfolio. When we take a look at the S&P 500 index for 2024, we notice a few things as far as volatility. Number one, the best day of the market was November 6th. It was up 2.53%. This was the day following the U.S. presidential election. In August, the worst day of the year was August 5th. The market was down 2.99%. This was following a negative 12% drop in the Japanese market. Our U.S. market was down 2.99% the following day. We did experience some volatility throughout the year in 2024. There was a period of time from July 16th to August 5th that there was a drawdown for the S&P 500 of 8.45%. So yes, volatility does exist. It did happen last year, but even in 2024, it was a good year for the market, even though we did have a drawdown of 8.45% during the summer. Let's take a look at these types of declines. How often do they happen? Well, one thing that we look at from our investment approach and here at Bander Wealth is the history of market recessions and corrections. For example, if we go back to 1953, we can see that there is a negative 5% or more decline that happens about 3 times a year on average. If we dive a little deeper and look at negative 10% declines, or even as much of a 20% decline, this does happen in the market, and on average, it's about every 6 years, with the last one taking place in June of 2022. So we know that there are corrections, there are pullbacks that take place with the market. Now, when we look at our opportunities for return, I like this graph. This is something that looks back since 1928. And we look at, for example, 5-year snapshots. Over 5-year windows, we can see that 89% of the time there have been market gains, with an average return of 10.42%. Now, if we want to expand that and look at 10-year periods of time, we can see that 94% of the time we earn money and make money in the stock market. If we go shorter increments of time, such as 3 years or 1 year, that probability declines. For example, in 3 years, that window is 83% of the time. So from our perspective at Bander Wealth Management, we like to look at the stock market in these 3, 5, 7-year windows and then assess our probability for earning returns. So what's next? A lot of people are asking about a new president, a new presidential administration, and what is our approach to the stock market for 2025? When it comes to presidential administrations, when I go back and look at each presidential administration going back to 1928, I notice that in most presidential terms, there's a pullback of some sort. As you can see reflected in this slide, just about every president during their administration had some type of pullback, either in the election year or during their term. Now, when it comes to some key takeaways for a presidential election, I recognize that oftentimes with an election, there's uncertainty, and that can cause increased market volatility. but typically this does subside after the election. Also, the historical performance has varied throughout each administration, but on average, there have been gains, regardless of which political party is victorious or is in office. And once again, market timing is difficult, it's risky, and it's unlikely to outperform a consistent investment strategy when trying to time the market, especially when based on presidential elections or administrations. So one of the key takeaways that I have for this particular presidential term is that there have been 9 times in history when there was a Republican sweep, and 7 of those times there were positive gains those first 2 years. So we've got a few things to look at when it comes to this next year in 2025, as well as in 2026. Now, how do we approach investments here at Vanderwealth? Well, number one, we want to invest in a diversified portfolio of stocks. This is what makes up our growth portfolio. And then number 2, we will invest in an income portfolio that will either match your upcoming expenses or maybe satisfy your aversion to risk and provide additional diversification in your portfolio. And then the third component that is critical to our investment philosophy is to stick with the plan. Allow me to dive a little deeper. This here include our model portfolios 1 through 6. 6 is going to be our aggressive growth portfolio. Our Model 1 is more about protection and a more conservative portfolio. As we meet with clients, we want to understand your appetite for risk, your objectives, your time horizon. This will help us to assign a portfolio for you specifically, maybe based on individual accounts or just for your overall portfolio. Our Vanderwealth portfolio will be allocated between growth and income investments. As you can see, our Model 3, a balanced portfolio, will have 6% into our growth investments and 40% into our income portfolio. Now, what makes up these allocations? Well, our growth portfolio includes a variety of different indexed ETFs. Now, we've done assessment and due diligence on a variety of different fund families and different indexes, and have this particular allocation assigned for our growth portfolio in 2025. As you can see, we have an index portfolio that covers the U.S. S&P 500 and includes large blend stocks. We also have large value and large growth. And then we have some additional components that include small value or even an allocation of 5% into the U.S. energy sector. We also allocate 20% into international stocks, whether they be international blend or emerging markets. This is what makes up our Vander Growth portfolio. As for our Vander Income portfolio, this is designed to cover your systematic withdrawals or to provide diversification within your portfolio. This portfolio will include 60% into our Vander Custom Income Notes. I invite you to take some time and better understand and familiarize yourself with our income notes. This is something that we customize and do each month on behalf of clients, and we will alternate between what we consider to be a growth income note or a bond alternative income note. This will make up 60% of our income allocation in sleeve. We also will include an ultra short-term fixed income ETF, as well as a high yield and a short duration bond fund, as well as Fidelity's total bond fund. This includes a variety of U.S. Treasuries, CDs, and high income and yielding bonds as part of our income portfolio. Now, in conclusion, I'd like to share with you a few reminders. First, the best investment is the one you can stick with. Most investments require time. It's important to do your homework and due diligence before going into an investment. That's what we do here at Vanderwealth Management, because we know the best investment is the one you can stick with. And then I'll also remind you that your get rich portfolio looks different than your stay rich portfolio. This is why it's important for us to have ongoing communication and to understand your stage of life. And then lastly, by being invested in the long term, you give yourself the best opportunity for results and positive outcomes. We here at Vanderwealth Management enjoy our communication and our interaction with you. We want to help manage your liquidity needs versus your risk. We know that life happens and that changes and things will come about in your life. We will help you to know how much should be allocated towards your growth portfolio or how much should be allocated towards your income portfolio. This is a document that we use as part of your strategic financial planning sessions. This is a living document. This is a worksheet. And during our appointments, we will touch on the 5 key pillars of financial planning. That includes estate planning, tax planning, insurance planning, income planning, as well as investment planning. So please look for this document and know that this is something that we will cover during our strategic financial planning sessions with you. We invite you to visit some of our online resources, whether it be our resource center on our website or your client portal, also at our banderwealth.com website. We've also started to provide more educational content on YouTube. This can be found at Bander Wealth Management. Please visit our social media pages to stay connected. And please know that we consider it an honor and a privilege to work with you. We look forward to talking during this calendar year. Please let us know any questions that you have in advance. And thank you for your referrals. We appreciate our many clients and professional relationships that share our services with their friends and family and others that can benefit from the work that we do. Thank you. We look forward to talking soon.